Good evening, good evening, or good morning, wherever you are. Thank you so much for putting on my show. This is Psycho Silver, and my name is Jerome. I hope that today you're counting your ounces, and that's your wealth. Your wealth is your ounces. And also, I do hope that you're in good health and that you're holding your word, especially to yourself. Thank you for putting on my show. Today, we're going to get into the news and current events. We're going to look at what's going on in finance, and we're going to have a good look at a bunch of things that are silver. The two main things we're going to study on this channel is the psychology of money. We're going to study the manipulation of the matrix, and we're going to have a good hard look at silver and where all those things converge. And before I jump into the headlines and we go on a journey through the internet and seeing what material I curated and have a conversation and analysis around that, I do want to quickly just give my thoughts about the events of today. And it's already 9:28 where I am, but the events of Tuesday, 9:27, with the explosion of the Russian gas line, Nord Stream 2, we are seeing a definite escalation in events, and it's been a steady escalation, one piece by piece. And so I'm not sure. I plan on having this channel be around, and I want to be careful with what I say. And so there's just some things that I intend on never turning away from the truth. But I also understand there'll be times where I need to infer what I mean more and state what I have to say indirectly. And I do hope you follow, because one thing that I know is this community of silver stackers are very bright people, and they're very aware. The silver stacking community, to me, is above average in intelligence, above average in their ability to discern truth. You guys are more attractive than the average people, and you're way cooler. You got better style. Like us silver stackers, we're the elites. We're the real elites. And eventually, we will also be the elite in terms of our wealth, because we're doing the right thing. And doing the right thing is not easy. I'm sticking to my guns. I trust myself. I know where this is headed. Now is the time to be in silver. It's real money. It's the only real money. And everything that's happening is gonna, all this money that's sloshing around, like they like to say, sloshing around and being created and destroyed, and all this transmutation of value, it's gonna find its way home. It always does. And we're already there. With the events of today, I just don't believe that the powers that be, the bankers that be, will ever take responsibility for anything. And they will always obfuscate, and they will always project, and there'll always be a narrative they can blame. And so I do expect, as these markets experience volatility, as the global economy experiences an acceleration to the downside, and people become more and more upset, I do expect that we will have more events that coincide with how it will be revealed that the entire global economy was a paper tiger in many senses. And it appears that the weight supporting infrastructure, the steel beams, have already been mounted with explosives. And we may have already seen some of those first to go off. And so I don't intend on falling for any of the narrative, except for that which I discern for myself to be true. But now's the time. Prepare yourself, especially your heart and your soul. Sorry to get so serious, but I feel like it needed to be said. And here we go. Let's go ahead and jump into the news. Come along. First up, we have a tweet from Raul. Let's get a little closer here. Raul on Twitter says the rise we have seen in the US Dixie are reaching pivotal levels year over year. Typically in the past, this type of upside volatility has resulted in economic stress. Highlights major events and crises. And we are tagging the SPX and QQQ right here. And there we see very definitively, this is a chart going back quite a while, 30 years. And we have a Mexican debt crisis. We have a Russian default. The tech bubble of 2000, housing bubble of 2006, GFC recession 2009, sovereign debt crisis of 2012, China devaluation and global recession of that's 2016, and here we are with the DXY year-over-year change percentage. That's important that we're discussing the year-over-year change percentage here is reaching a really significant peak. And the question in this chart is, what will be the cause of it to turn back downwards? Very interesting. There's so many charts like this in the sense that there are many charts of all varieties are showing great extremes in the different data points. And we'll see a lot more of those even tonight. On to the next. This is a tweet from SRS Rocco Report. And this is absolutely one of my favorite accounts on Twitter. If you do not follow this account, please do. I believe the guy's name is Michael D'Angelo or something. It's D'Angelo of some sort. Great guy. Great. He does really fantastic interviews if you ever get the chance to watch one of his interviews. But at least just follow this gentleman on Twitter. SRS Rocco Reports writes, oh, let me move. Maybe I think you can probably see a little better if I do that. Okay. The exponential increase in the U.S. public debt is setting the stage for a massive collapse. Collapse in debt will also trigger the subsequent collapse of asset values, most stocks, bonds, and real estate. This is why it is wise to own gold and silver. And he is inviting you to subscribe. And let's have a look at this chart here. What we have is another parabola. We've been seeing a lot of those. And it started in the 80s over here. But he's pointing out the exponential trend line and what that looks like sometime closer to the 90s or in the early 90s. And it's just a chart of the public debt, very straightforward, going in a pattern that usually spells disaster no matter what it is. When you see a chart that looks like that, next thing that happens is it usually goes down. And that's just all charts. We have an interesting reply to this tweet. Let me make myself a little smaller. I need to make sure you can see all this. We have an interesting reply right here. A reply by Nick. He says, this is misleading. You need to look at the overall debt load as percentage of GDP to get the full picture. Okay. Okay, Nick. Does not look that much better to me. That is equally as frightening. I like the first comment. The first comment says, yeah, that's not exponential at all. Everyone is a billionaire. I like this guy. Let's give everyone a billionaire a follow. Whoever this gentleman is, that was awesome. On to the next chart. Here's a tweet from Luke Groman. Luke Groman writes, At current Dixie levels, that's the dollar, foreigners have up to 7.5 trillion in USTs to sell. That's treasuries. Fed has 8.7 treasuries to sell. Duration proxies for sale on the come, and US Treasury has $1 trillion in US Treasuries to sell, with another 600 billion through 1.6 trillion on the come if US has a minor recession. Sipping from a fire hose comes to mind. Okay, so he's responding to something here, but his main point is there's a ton of treasuries for sale. And we see this really, once again, astonishing chart here. Like just another, it's just parabola after parabola, isn't it? This is Lisa Abramovich. And Lisa Abramovich says, Treasury auctions mattered. After yesterday's weak 2-year auction and today's 5-year was poor, what's amazing and concerning at the same time is the 5-year yield at the highest level in 15 years, up 1.21 at the beginning of 2022, not bringing out more demand. Okay, so let me make sure that this is simple for us, because this is a channel not for super advanced people. I'm not super advanced, and I'm here for someone that's level or two less informed than I am. I'm not here for the great financial minds. Y'all don't need me, but I'll make this fun and simple and interesting for those of you that I can help, because there was a point where I knew none of this. And people actually believe that they can't learn about economics and finance. It's total bullshit. You can learn all about it. There's different languages and there's some principles you gotta learn, but nothing is beyond your ability to learn. So don't let anyone tell you that this is not a world for you. It's easier than ever to learn all this stuff. Okay, so what we're saying here, this chart going so high right here, that is because the treasuries are not selling. And so the rate explodes. So that means that there's not demand. And so this is the yield. And the yield is getting higher to try to entice people to buy, because they're getting a better return on the dollar, right? So your investment gets a better return when there's less demand for that asset. And what's astonishing about this chart is that see how it's really low over here? It's been on the low side, 1% for so long. And now we're way up there and still no one wants to buy. And what that means is a complicated answer. But long story short, the worst of the worst case scenario, what a lot of people believe, is that there's just concern over the US government's ability to even pay on these treasuries long term. And that's that.
Companies are.
And here's my favorite, Gatorade. It kind of grew a waistline here. It used to be 32 ounces, now it's 28 ounces, but it is the same height. You can see it there.
Yeah, she's right. That Gatorade bottle's looking good. You're like, damn, what you been doing, Gatorade? You stopped drinking Gatorade? But yes, from soda to...
So we do see here that the concept of inflation is making it to the mainstream. Even the normies right now are encountering material that is talking about the inflation. And they're not even really denying it. The Daily Show is as mainstream as you get, right? It's reality for everyone right now. Only we, the beautiful, intelligent, well-informed, cool silver stackers, knew about this not too long ago. But then the rest of the people are finally catching up. Here's another video about inflation. And I love these videos because if you show someone data and statistics, we are in the age of such low attention span. People are pathetic. Like, they can't even interpret a chart or process it a couple steps deeper to see what it really means. But when you show them something like this, then they can get it. Let's check this out.
Wo ich bin, Sparkasse auszahlen, gib den Scheck und lass mich da was draufmalen. Wo ich bin, Sparkasse auszahlen, suche noch nach Kleingeld, muss noch etwas rauskramen. Wo ich bin, Sparkasse auszahlen, steuerst du nichts bei, tja, dann muss ich dich halt ausladen. Wo ich bin,
Speaks for itself. Next up, we got to talk silver. This is a silver channel. We have another post from Ditch the Deep State, the famous Reddit Wall Street Silver poster that does keep track of us, or does keep track of the Comex for us. Has another post today. He posts every weekday. Thank you, Ditch the Deep State. Ditch the Deep State writes, 1 truckload of silver is out of registered, dropping Comex registered to 42.999 million ounces. And also a boatload. We have a truckload and a boatload. A boatload is out of the vault. Almost 2 million ounces out of the vault. In the silver stacking world, ladies and gentlemen, this is a big, smoking, hot fire, blazing. This is a red flag. This is a siren sounding. This is a big group of people running in one direction. Big deal, big deal. For the new arrivals, why do we always yell out of the vault? Out of the vault, because we are apes. and I look at these updates daily, and 2 million is big. Theoretically, and this isn't what's been happening, so I don't expect it to continue happening like this. But at 2 million ounces a day, this vault's going to be dry in 21 days. Oh, holy shit. Then here's the most important chart. Make sure you can see that. Here we go. Here's the most important chart. This is Comex silver, total of all vaults. You see this registered? That's the green line there. Look how far it's gone down. Registered is the amount of silver that's available to buy and sell. It's the free floating silver. If the silver is in that blue line, it's eligible. Well, it has an owner and it's not for sale, not at these prices. The registered is the free floating silver to be bought and sold. And that line is going down. And we all wondering what happens when it reaches 0. And that is the day that we're waiting for as silver stackers. And if you're a member of Wall Street community, the Wall Street Silver community, I recommend being a member of this Reddit. And this is where I've made many of my friends and what inspired me to start my channel. And there's so many excellent posts. This is one of the best places on the internet. And we're going to visit this place every day. And again, from Wall Street Silver, I had this beautiful post here. Jagvakit writes, always check your change. This is a 1964 quarter, which would be 90% silver, when silver used to be money, at least officially. Silver's still money, it's the only money, but at least when the government considered it money. And they did take all the silver out of the coins after 1964 because they wanted it for themselves and they wanted to give us fake money. And that's what happened. But according to the Constitution, money is silver and silver is money. And there should be no other money except for gold and silver. But we don't follow the Constitution very much anymore, do we? Also, from Wall Street Bets, Sean McCoy, this is a repost from Twitter. Sean McCoy writes, I'm 27 years old. I have $120K debt from an undergraduate degree. I've been paying $970 a month for 5 years. And of the nearly $60K I've paid in time, only $2K has gone towards my loan. I ask again, how the fuck is this even legal? And he wants to cancel student debt. I really feel for the guy. and his probably, I don't know him, you know, so I'm just gonna guess that you know, this is normal for him. He probably knows people that are in such debt. And what's interesting about that is, you know, it becomes normal for them. And he comes in, excuse me. There's a culture in America that thinks this amount of debt is normal and that's the way they do it. And then these people go and they get in a bunch of debt and they go through that system and they become teachers or whatever they're doing. Then they advise other people to engage in the same level of debt. And that's why we think it's okay. And I bet you after he pays it off, he's probably going to feel different about it. This is the mirror exposure effect. The mirror exposure effect describes our tendency to develop preferences for things simply because we are familiar with them. For this reason, it is also known as the familiarity principle. And this explains so much of Americans' crazy debt habit is they see family going into debt. They're going to school with other people taking on massive debt, and it just becomes a way of life. And they're unwilling to fight back against this style of system or consider there's other ways to get an education, and they fail to encourage other people to pursue other ways of life other than taking on such debt from the bankers. Imagine the leverage we could take back if we just refused to go into so much debt. It's a big problem in our culture, and I just believe this is a huge part of it. They see it, and then they do it, and then they tell their kids to do it too. And on we go. Here's an interesting post from TikTok.
Pound. Now watch how much it'll be when we check out.
Weigh your item.
1 pound.
Move
86.
your item.
See
to
that?
the bag.
Price is still the same since Wednesday. So let's switch it up and go with a peeled sweet onion and see if this one's accurate.
Move your yellow onion.
Okay, that one's wrong. Sweet tart chewy fusions, $2.99. $2.99. Slippy Sour Patch Kids, $2.99. Sweetest fish. Here we go. 30-cent markup. 30-cent markup. $1 markup. SMH. So I've been noticing that a lot of the items, they don't really line up with what's said on the shelving. And it's off by not a whole lot, a few cents here and there. But check it out. Anyone ever do this? Check this out. It says $2.59.
So, in no way do I don't really believe that these businesses are intentionally misrepresenting their prices. Rather, what I do believe that is happening here is that there's been such rapid change in the pricing to the upside. They're going up so fast that these businesses are struggling to keep their signage and to keep their and to keep track of all the different price changes, mostly all up to the upside. So that's what I suspect. Interesting. Next up. Here we do, maybe this isn't the best order here. Let me skip over to, I want to talk bonds a little. Here we go. Let's talk bonds, and then we're going to go back to that chart real quick, okay? Here's a post from Zero Hedge. Zero Hedge writes, Bank of Japan conducts fixed rate bond operation to buy the JGP fixed rate method for 10 and 5-year outright FUT. That's a future. Every day, the BOJ is forced to be in the market buying unlimited amounts of 0.25 to avoid bond market collapse. What does that mean? What does that mean? Let me explain that. as we stated earlier, or let me play this. It's this is big. That's the storm. As we stated earlier, when there's not demand for the bonds, the price, the yield starts to skyrocket, because the yield is supposed to go up to entice people to buy the bonds, right? And what this tweet is saying here is, in Japan, their central bank is stepping in and buying those bonds because there's not demand for their, so they're basically trying to save their economy and the bond market by having the central bank buy the bonds, whereas there was normally buyers for those, whether it's investment funds or private investors or foreign countries. Like, usually someone wants that debt, like they want to get some return on their money, that it's better than saving, right? You get a return. So if you have vast sums of money, you're going to pick up some bonds and earn a couple percentage points of interest over time, rather than just hang on to the cash and, just lose it to inflation. So there's always been buyers for bonds, but things are changing. And why aren't they buying the bonds? And that is the $1 million question. And it depends on who you listen to. The people that are the most worried, or I would say the most pessimistic, is they truly believe that they might default. So you lose your money. But a default is such a huge and rare thing. Like, for a whole fucking nation to default, that's cataclysmic. That's some end of the world shit. Like, countries pay their bonds, or at least they have for the past 100 years or whatever. But you have Bank of Japan stepping in because there's no buyers. And when you get your central bank buying from the government, it's a really weird scenario. That makes the banks they're already very powerful, but when they have that kind of power, I don't even know where we go from here. This is weird. They call it modern monetary theory. And economics is normally, they're like laws of nature. But when you get this modern monetary theory and they're trying to manipulate these, you don't know like which way, you don't know how this breaks down. It creates unpredictability. It's not healthy though. And so I did want to show you that first to set the stage. And I think there's an excellent comment down here too. Let me read this comment too. Here's a good comment. I'm glad I remembered to read this comment here. Zero Hedge commenter underneath says, modern monetary theory like this can happen until there's some liability denominated in a foreign currency, at which point the cross rate with that currency is what will destroy the modern monetary central bank. The UK and the European Union finding that out now. Japan is spared for now. He also explains, this also explains the odd global reluctance behind nuclear power. The petrostates have likely surreptitiously lobbied against nuclear, knowing that it would destroy the demand for their natural resources and or currencies. Example, how Russia tricked EU into green madness. Okay. What we're saying here, I think that's what I was trying to say. This guy said it better. When you have the central bank buying the bonds from the government, that's all well and good when they're working entirely in yen. It kind of solves the problem temporarily. But when you owe debt to another nation, well, you can't just take the money from one pocket and put it in the other, and at the same time be repaying the debt that you owe to someone else. I hope that makes sense. So when it's all within the same system, you temporarily solve the problem. But it gets really weird when you owe people on the outside. Make sense? What I wanted to show you here, this is a bond market ETF, okay? And this is the Vanguard Total Bond Market ETF. And so what you need to know about this is that this is an ETF. This is not rates. So when you see rates spiking up, like we've been looking at these charts, that means that there's not demand, okay? But in this chart, it works the opposite direction. And I'm showing you this because I want you to see that it's all bonds, okay? We see that happening in, let me get myself off the screen. We see the bonds going crazy in the UK. We see the bonds going crazy in Japan. The bonds in the US are also going crazy, but the dollar is getting stronger at the same time. That's the catch. These other ones have their currency weakening, but our currency is getting stronger. But look at these bonds taking a dump. This is Vanguard Total Bond Market ETF on a 1 month chart going back to 2007-ish. Look at that massacre. Look at that. Look at those red lines. Ugly. And this ETF is a very good ETF to look at to understand because it's a really good blend of all the bond market. We're going to keep an eye on this. This is huge. On to the next slide. Here we have an excellent post from Plata Muerta. Plata Muerta says, fiat currencies never work in the long term. 100% of the time. The only dollar that matters is the one that's made of 371.25 grains of silver. Excellent post. Look, it says $100 trillion on it. Isn't that a lot of money? No. What is this, Zimbabwe? Coincidentally, I did have a friend tell me, this is so funny. There's been so many $100 trillion Zimbabwe notes given like as a joke that people actually started to buy them up because it's funny and they're interesting to look at. And now if you go on to eBay, these $100 trillion Zimbabwe notes are they're rising in value because they're like a collector's item. That's the funniest thing. I did have a friend show me that, and we took a cruise over to eBay and we saw that they're going up in value. Let's look at one real quick. Let's check this out. Hopefully I don't crash my. Let's just have a look. We'll go eBay 100 trillion. Yeah, see, and Google already knows what I'm after. Here we go. There's eBay. There's eBay. Looky here. Reserve Bank of Zimbabwe. $100 trillion banknote bills. Uncirculated. $160. That's awesome. I wish there was some comments on, oh, they have a safety feature on them too, eh? How fancy. That's pretty fancy for toilet paper. I do believe that I have a couple of these because they're so cool. Actually, my coin dealer just gave me some for free because I was buying a lot of metal. He's like, here, take one of these. Thank you for your business. And I was like, this is cool. I showed it to all my friends. Next up. Did we skip anything? No. Okay, so this might be the most profound. This is the most profound piece of information that we have on this show tonight. Right here. This is from Michael Gade on Twitter. Also follow this gentleman. Below are the top 20 largest peak and trough drawdowns for the S&P 500 going back to 1961. Never in history, in an extreme drawdown for stocks, have treasuries, the risk-off asset gone down more than stocks. Michael Gade says, wake the fuck up. And there you have it. Stocks are considered the safe. excuse me, bonds are considered the safe asset, and stocks are supposed to be the risky asset. And the stocks get you the returns, and the bonds get you safety. And traditionally, they would switch back. Investors would switch back and forth between the two, and grow their capital and preserve it, and grow their capital and preserve it. And you see on this chart through the years, going back to 1962. They're usually one's going up and the other's going down, and one's going up and the other's going down, or at least one's going down a lot more than the other, right? Because some of them they're going down together, but this is the first time you see that purple bar going down more than the gray bar. The risk off asset gone down more than stocks. This is truly unprecedented. We are in uncharted waters. What's wake the fuck up, says Michael Gade. That's shit getting real right there.
Oh, we went to zero.
Let me show you this one TikTok video having to do with crypto. The exact moment Squid Game crypto rug pull happens.
Oh, yo! Damn! So the market cap is $2.168 trillion. And now the market, oh! Oh! We went to zero! Yo! Damn! There we go! Squid Games! Sayonara, motherfucker! Oh, good!
This is Doodle Dragons, and
what they call the market cap for a crypto coin is complete bullshit. It's utterly fucking bullshit. They try and multiply the amount of coins by the last price of a coin sold. It kind of works for stocks, but it doesn't fucking work for crypto, okay? 100% of the time, even if a crypto is going really high, if there's any kind of significant selling of the crypto, the price is just going to go down. So to call that a market cap is ridiculous. And I understand that stocks, the market cap works similarly, but the huge difference, the most important difference is that stocks are for an entity that is making money. They have revenue, they have income. Hopefully they have profits, but not always, because there's a lot of bullshit going on right now. These cryptos ain't making no money. They're not doing anything of value. Okay, there is some exception with Ethereum and Bitcoin and some of the other smart contract crypto, but on the whole, they're not fucking making money. It's the only money that's involved is from the people that are speculating and buying and selling. Oh, market cap. One of the other bullshit aspects of a crypto that you see all the time. And I do want to play another crypto video for you.
Alright, y'all want to learn about some internet history? Let's talk about the first rug pull in online history. Now, if you're a collector, I'm sure that you're probably familiar with Beanie Babies. They were created by this guy named H. Ty Warner. The reason why Warner was so successful with his Beanie Babies was because he introduced a retiring feature. This meant that he would only produce a certain amount of Beanie Babies. This created a scarcity model similar to what the blockchain does today with NFT technology. When something is scarce, it creates FOMO, which is a fear of missing out. This couple was standing before a judge trying to decide who gets to take the Beanie Babies home as a result of their divorce. This is how serious they was taking this. Retire Inc. was also the first business to produce a business-to-consumer website designed to engage their market. Sellers even began changing prices throughout the day based on which beanies were retiring. This was all good until he tried to retire the whole collection. He had the whole community thinking that this was going to be the last Beanie Baby. But I'm out of time, part 2 in the comments. Alright.
Wow. Isn't that fascinating? I need to make sure that I don't lose this clip real quick. How do I favorite this? Because we definitely need to dig into this a little more. Where's that favorite button on this? That's a report button. I'm definitely going to follow this gentleman. And I'm going to share this real quick. Maybe that's not the way to go. How do I make sure I can see this? I'll heart it. And there should be a freaking favorite button right there. I ain't finding it. Okay, we'll go to a clip 2 and I'll figure that out after the show here. Oh, it's not there. That is disappointing. Let's see if I open up his channel, if I can find it for us real quick. That makes me sad. Where is part 2? That was so good. Ooh, you got some dead air for you. I got some dead air for you. Let's search some keywords. We're gonna find this. First rug pull. What did he name it?
Y'all want to learn about some internet history?
We'll search hashtag Beanie Babies.
Y'all want to learn about some internet history?
Dr.
Let's talk about the first.
Dr. Clips.
Y'all want to learn about some internet history? Let's talk about the first rug pull in online history. Now, if you're a collector,
We need part 2, guys. What the heck? Oh, here it is. Ooh, I was getting nervous.
We back to finish up the story about the first online rug pull with Beanie Babies. Alright, so boom, things started going slow when he retired a collection and it didn't see a spike on the secondary market. You see, he started to get a little nervous, so he started wondering, what can I do to keep these babies moving? So he came up with the bright idea to retire all of the Beanie Babies, the entire collection. This meant that there would be no more Beanie Babies to mint. You would only be able to get them on the secondary market. This Beanie Baby was called The End, and it was meant to be the last Beanie Baby in the entire collection. He even included a farewell poem attached to the bear. This mass retirement resulted in a lot of sales. People were running to get the babies before they couldn't get them for that price no more. It turns out that this was just a plot to drive up his sales, and he didn't plan on retiring the babies. After releasing this Beanie Baby called The Beginning, his community was outraged and they started dumping their beanies on the market. Now you can find them in dollar stores. We back to finish.
Wow, that is amazing. We just learned something so...
Have you ever wanted to believe in something, even though you knew it couldn't be true? Did you ever want to believe it so bad? Have you ever wanted to believe in something, even though you knew it couldn't be true? Did you ever want to believe it so bad?
Wow. With that brings us to a good solid 44 minutes of a show. And I am happy to end it on that interesting note. I'm going to look into that. This is exactly the kind of content that I want to bring to you in this show. And I felt that today was a good show. And I want to deliver you a show every day if I can. I want to be here for you. I want to serve you with interesting stories and news. And if you help me with the likes, if you help me with the feedback I care about the most, okay? If you help me with the feedback, the likes, and the subscriptions, okay? I promise you, I'm going to work so hard to make a channel you like, and I'm going to get great guests on this show, and we're going to ask them good questions that matter, and we're not going to bore you to death and try and be a I feel like a lot of these financial channels, they just try to appeal to everyone. And this is not for everybody. This is for us stackers, the silver stacker community, because we're fucking handsome and interesting and high IQ, and we have a better fashion sense than the others, and we have a higher tolerance for truth. I mean, we're sexier too. So this is the best channel because we're the best, and we're going to get interesting guests and ask them interesting questions, and we're going to grow this community and help each other. And that's the plan. And if you did make it to the end of this episode, you're a stud. I appreciate you. I'll be back again very soon, tomorrow, in fact. I appreciate you for watching, and wherever you are, have a good evening. Bye.